Welcome back to We Hate Money, episode 9. Episode 9. Hard to keep track because we haven't been doing it consistently. How are you, Wiz?
Oh, just doing fantastic. How are you?
Yeah, I'm going good, mate. I'm always good. I've had part of the reason that I haven't been available is because I've had my kids start various levels of education, and it's been a hectic period for me. But we're all sort of settled in now, so back at it. How are you? What's going on?
Oh, just balancing work and just trying to keep a healthy lifestyle at the same time can be challenging when you expect too much of yourself in that way. So, but everything's good. Everything's good now. So
That's good, mate.
we're
I
back.
hear you.
We're
So.
so back.
Oh, we are so back. So you and I today we're going to discuss general market sentiment. And there's a lot of a lot of people on both sides of the tape, bearish and bullish, who have got different opinions on this. But how do you think we're placed at the moment?
I I think there is extreme levels of enthusiasm for whatever whatever kind of cope that you're sipping on, whether you're getting extremely bearish or extremely bullish, or maybe you're on the sides. It just seems like people are enthusiastic about the same names that have been winning for 6 months, and they want to sell other equities or move money into just those names. So that it's interesting to see that. You'd wonder if people would take profits, and it's like, yeah, you know what? Why not?
Yeah, I know. Like
Let's just go higher.
to say that it's enthusiastic is, I think, slightly an understatement. But I understand why you're saying that. Well, a friend of ours, or a friend, an acquaintance of ours, when NVDA had their earnings recently and went over 800, said that, and saw a news item about NVIDIA on the local news, and this person's in Germany, thought that it was the top, and thought, this is the time, like, let's short it, and had a look at the March 15 NVIDIA puts, whatever strike. I think they calculated about a 20% drop from the top. And this is going back, like, so that's 10 days from now approximately is when that expiry hits. But we were talking about this maybe another 10 days ago. So um, at first, NVIDIA did sort of, look like a little bit of a blow off top, but now it's come back roaring into the 800s. And I just think there's certain parts of this market sentiment that is just not yet exhausted. I don't want to say it's got heaps far to go, because it does feel like things are getting prickly, and thing like we saw some in data. You shared some data, and so did a few people earlier on, about reinflation, and whether or not they are going to be able to cut rates this year, or whether or not they're going to have to hold them or even hike them again. So I don't know. I feel like sentiment is just off the charts. And if you think about things like crypto, like Bitcoin and the ETF that got approved, and all the altcoins which are going crazy, um, and then throw in things like that BTFD program. Is that what it's called? BT Bank Term Funding Deposits, or whatever it is. That's going to be
Yeah.
ending
Buy,
on March 11. Like, there's all
buy the
this.
fucking dip program. That's what it is.
Is that what it is? BTFD by the fucking DIP program, baby. Well, what SMCI got added to the S&P 500, and that's going crazy. Like, there's just a lot of weird things going on right now.
There's
Yeah.
Yeah, that's why I say extreme enthusiasm, because what you don't want to do is give people the impression that we're at a stage of the market that invites people to be contrarian, right? So it's like I don't want people thinking that, oh, extreme, we're at euphoric levels when we really may not be. And we don't we don't want to I don't want to encourage people to lose money by trying to time a top. It's a freight train. You have to let it run its course. If you try to get in the way of it, it could hurt. So like today, look at NVIDIA after hours. It hit like 870-ish, pulled back like $30, and now it's up like back to 860 after hours. So if you didn't sell before the close, right, now you're kind of questioning your decision making.
Man,
Like,
when that mutual acquaintance said to us that they thought it was going to go down by March 15, my initial reaction, I didn't do this, but my initial reaction was, let's go and look 3 months out to the next earnings and buy some $1,000 calls because I really feel like this has a ways to run. I have not yet done that. I might still do that. I probably won't get as good a price as I would have back then, but man, it just feels like and that,
do a calendar credit spread, or do a calendar spread.
yeah,
Just
perhaps.
yeah, buy buy next earnings 1,000 calls, and then sell like some intermediary 1,000, and then all you have to do is just kind of hold and see where it lands, and it might rebound back up, and then it's at least a cheaper entrance IV wise. So
I like that. I like that play. I don't know if I'll actually play it. I feel like that stock in particular, because of the news that we did discuss a few episodes ago, which has been confirmed in the mainstream media. What was that? What was that particular? There was a particular customer of Nvidia's, and people at the time were speculating that
cross
Nvidia.
something.
What did you say?
I think it was like cross something, cross
Yeah,
phase, or
Yeah, I can't remember, but there was one that sort of
yeah,
came out and people were like, okay, this is a brand new startup and they used to do something completely different. Now they've pivoted to AI chips. And people were speculating that NVIDIA was loaning them the money to then buy their product and then just sort of, I guess, like a round robin financing arrangement. And what it came to light was that NVIDIA is doing that, but they're actually directing banks to loan the customer the money to buy the chips from NVIDIA, which are then used as collateral for the loan and then rented out for AI compute instantly. So those companies are making money. It's almost like NVIDIA's handpicking their customers and able to sell whatever volume they want to beat their short-term quarterly targets. And like, will this
yeah.
and somehow this is legal because of the third-party bank intermediary. And I know you and I have said offline, off this podcast, like this is not novel. It has occurred before, but has it occurred in this particular way where they're using a third party bank intermediary, and that's what makes it legal. So what could stop the freight train that is Nvidia is if these companies can't service their debt for whatever reason, they can't monetize the AI chips fast enough, or if there's a competitor that comes along and has a better product than Nvidia's, and then are unable to keep selling in the amounts they need to keep beating growth expectations every quarter. So yeah, I just feel like it's a bit of a really good setup that Nvidia's got going on, and it just seems like everything's falling their way at the moment. What do you think about that?
I well, yeah, that's why I say, don't jump in front of it, because what we're waiting for is a sort of like a confluence of limitations to appear. And they're very specific and very narrow limitations. So you just can't, you know, you can't really hedge them off. Once the market figures out when those are actually going to hit, it's going to start to front run that move to the downside. And so it is probably going to materialize around one of the earnings it has. And I would say it has to do with contracting margins of some kind. We have to remember back in 2022, NVIDIA was making these chips, they had them. So it wasn't like the AI chips were this brand new thing. It's just Microsoft started buying them, and everybody else was like, oh, yeah, maybe we should buy these too. So there's no actual reason for anyone to think that these chips are going to do anything more than just be a cash cow for Nvidia and just a massive loss for these companies that are buying them. It's a
Well,
little too soon to price in the this much enthusiasm,
the
because
companies
we
that are
just aren't
buying them,
seeing.
the companies that are buying them though, is I don't think those companies that are buying them would be actually using them themselves. I think they'd just be setting them up in big server warehouses. This is just my hypothesis here. Like I have nothing to confirm this, but I
Well,
think
I
they
mean,
just
like the big cap companies are actually using them.
yeah,
Like,
of course, like
yeah,
Microsoft and
yeah,
Tesla and Google and
yeah.
Amazon and whoever else is buying them. I'm
Meta,
sure.
yeah,
Yeah,
all,
Meta.
yeah.
But what I'm saying is
They're
these smaller ones, I feel like they would just be setting up their own warehouses and then renting out that compute to companies that can't afford to buy them themselves. So like if you're
Well, I
not
think we saw some news where some were trying to offload some of those, but it wasn't a quality source.
I did see
There
that piece of
wasn't
news
any.
that said there was like demand was drying up, but that was like it felt like just a one random news article and I saw nothing else confirming or denying that. I did
Yeah,
see that though.
so yeah, I mean, it could be that one of their um, uh, forced customers may be having issues, but that doesn't mean the rest are. And by far, it doesn't mean that this bubble's going to pop because of that one thing. We have to see a lot of things hit NVIDIA's earnings, and we have to see a lot of people either shift away to a different type of chipset. We have to see a lot of things happen, and it's just too soon to predict that. So there's a lot of meat on that bone. People shouldn't just jump in because NVIDIA could go to 2000 on,
Wow,
you
that'd be
know,
wild. That'd be wild. If it
it,
went to 2000, that'd be
it, NVIDIA is in excellent hands. The CEO is well adapted to pumping that stock. So I would not put it past them to squeeze every dollar out of this momentum that they can. So, I mean, people need to remember that this
its
isn't
market
their
cap.
first bubble they've been through.
Its market cap at the moment is $2.1 trillion.
It's
So,
another Apple.
and that's at 850. Let's just say that let's call it 860 after
Yeah,
hours. So if we double that, 860, we're getting to, let's just say
16 or
1700. Let's just say seven. Let's
1720.
just round it off at about $1,700. That's a $4
Yeah,
trillion market cap company. That's bigger than Microsoft on way less revenue, way less earnings. I
it's bigger
understand
than the
why.
UK.
I
That's like
understand,
two UKs.
bro. It's bigger than. Is that bigger than every? Yeah, I think that's bigger than every GDP bar America and China. I forget what Japan's is, which is the third largest economy, but I think anyway, it's
Yeah,
well, anyway, but I understand why you say that because I sort of think the same thing. Like if they can beat short-term expectations quarter over quarter every like for the next let's say the next 4 years, people are going to see those growth rates and just be like, oh, growth is not priced in. Like this is going to keep growing into its valuation. And there's going to one day a domino will fall with this scheme they've got going on, and the whole thing will come tumbling down. But when will that be? I don't know. Anyway, that's a
yeah,
fair bit of chat on Nvidia. What else should we have a
yeah.
chat about?
We, we've we've got a lot of other neat stocks to talk about. So I mean, it's been interesting to see Tesla sort of being left out of the AI sort of hype.
Yeah, I think
Even
Tesla's
though,
got other reasons for being left out. I don't think it's because, well, one, I think people are sick of hearing about like Elon Musk talk about the potential for full self-driving or the robots when nothing's really eventuated. Like he's been talking about it for a long time. Some would say he's pumping the
yeah,
stock. Maybe I would say that too, depends. But I think there's also other reasons for why Tesla's been falling. Like I know there was rumors that came out last session, maybe yesterday, about banks not happy with the X.com Twitter debt and they want to refinance it and get Elon to sell some shares or find the cash elsewhere to pay some of that down so they're not as exposed because the valuation has crumbled on what he bought it for at the very top of the market. And then there was also
yeah,
news about registrations for this particular quarter for Tesla, which were down. I forget the exact amount, right? But they were down a lot. Like if you compare it quarter over quarter from last year, like new registrations were down heaps, predominantly out of China. So people are sort of speculating that the next quarter's results are going to be bad. However, what I will say about that is, and I didn't figure this out. Like I look at a bunch of different pundits that talk about this all the time because Tesla's covered to the nth degree. But one thing that people who are pointing to that quarter over quarter drop are not taking into account Chinese Lunar New Year and the period in which that occurred this particular quarter, which affected, I guess, production and deliveries out of Giga Shanghai. So I think it's those two news items. Oh, and also the sort of hangover from this compensation plan being struck down. This shareholder who had 9 shares and his lawyers demanding 6 billion in all stock compensation. So I feel like there's a few different forces at work which are putting pressure on Elon Musk and indirectly Tesla's share price because they're trying to gain influence. So
right.
yeah,
Yeah, I mean, to me, I feel like they had a very lofty valuation priced in, when it was at 400 a share. And there's enough concerning news. People may be wanting to see a little bit more proof in the pudding before they spoon it back up, and I can understand that.
Well,
So
my own gut feel is, and I've sort of said this to you before. I don't know if I said it on the last pod. I can't remember what I said. I always forget what I've said, but I think Tesla goes lower this year, even without these adverse news events. I think the results this year with rates high, them fighting a price war, which means margins are contracting, no new models, Cybertruck, maybe some perceiving it as a flop, and also not being able to produce that in large quantities. I feel like in general, like fundamentally, when I look at Tesla and I've valued it, it's going to go lower this year. Like I thought that always, but I also think that it's going to make it an attractive buy for 2025 and beyond. And this is general in
well,
nature. Do your own due diligence. I'm not saying people go out and buy Tesla if you listen to this. I'm saying I'm considering buying more of it if it gets down to around that $100 mark, which is where it got at the start of 2022, perhaps. I can't remember exactly when it was. But
yeah, it was like mid-January or something like that.
was it 2022 or 2023? I'm forgetting now.
23 was the I think was the bottom for it.
Yeah, maybe Jan
January
2023. Sorry,
2023.
yeah, maybe 23. Sorry, I'm getting confused. But yeah, I think these events, and I think the big one is the Elon's stock compensation being struck down, them talking about reincorporating in either Nevada or Texas, what that's going to mean for the company, and then when they eventually put his new compensation plan in place to replace the one that's been struck down in Delaware, and what that does to his ownership. So yeah, I don't know.
Well,
I think there's a lot of things that are going to drive this stock lower, but for me, fundamentally, nothing's changed. Even like let's just say
yeah,
like it's a risk. Like let's say Elon gets absolutely smashed and has to sell shares to cover the debt portion of Twitter, and these lawyers get awarded. I don't think they'll get 6 billion in compensation, but say they get, I don't know, 1 billion, 2 billion in compensation in stock, and then so effectively all of a sudden you've got either banks owning a large chunk, these lawyers owning a large chunk. Elon doesn't have the percentage he used to have. He's got all these actors who now own a lot of Tesla. Will that's a huge risk factor. Like it might mean that Tesla's taken in a different direction, and ultimately maybe that'll be a better direction. But I think losing Elon Musk, like a key man risk in the short term, would absolutely crush Tesla stock. But I'm still bullish on the company, so I don't know. For me, it's like neither here nor there. That's how I feel about it.
it's a journey of ups and downs. That's all it is. Um, it'll be fine, I think. Ultimately, in the long run, it's just getting to a point where there's more certainty. Because Wall Street hates uncertainty.
Yeah.
They like to be made comfortable.
I actually think
Um,
I think that whole Delaware thing saying that he didn't I think I read it all and I was reading. I thought it was a load of horse shit. But when I read that judge's determination, this is the same judge that forced him to go through with the Twitter buy. When I read that determination on the day or the day after, and basically they were saying that there was too many people on the board close to him, the relationships weren't genuine and like arm's length, I guess you'd say, and they didn't do the proper disclosures. I don't think I don't think that's the case. For me personally, as a shareholder, voting on that, reading all that at the time, all of the ridiculous milestones that he had to hit as CEO to even get like to even unlock his compensation plan, everyone thought it was not going to happen. Like everyone thought this is such a lofty goal. Of course, let's approve it because if he does this, then like orders of magnitude, we're all going to be a lot wealthier. And then lo and behold, he
yeah,
does it and it gets struck down in retrospect. I just feel like it opens the door for them to redo that compensation plan and do another one and make sure they follow this judge's, I don't know, checklist, whatever, to a T to make sure that it can't be struck down in retrospect again.
I
But yeah,
heard it. I was listening to about CEO compensation plans and how they've sort of evolved over the decades. And there's a very interesting, there was like a correlation being made between um, how CEOs behave when they're compensated in different manners. And so, I think that when you motivate somebody with the same similar package that Elon had, it creates a tendency to maybe try to accelerate the timelines of things, put more optimism maybe than what would normally be under a different type of compensation package. So it's not an unusual compensation package nowadays, but I felt that was interesting, just like it's just general discussion on compensation. Um, and of course, they listed all the common, infamous people, but I'm sure there's plenty of companies that have done well from that too.
Yeah, I
So
don't know. I think time will tell with this one. Anyway, going into next
yeah,
earnings, I expect Tesla to go lower until we see some kind of major catalyst or some sort of resolution in these issues. And
or or
yeah.
Optimus starts, tickling my feet, then to the moon. I'd like to talk about as a quick shift um, to some upcoming catalysts we could see. Uh, I know we
For
talked
the
about sort of.
market or for Tesla?
I think the market make it a little more general because I think Tesla we have to wait to see the fundamentals improve and or maybe show that the fundamentals are still very strong and what we're just seeing is just the cyclical part of the market resolving itself, right?
Yeah, right.
So um, I think that's kind of going to be the case quarter to quarter. And obviously, we'll talk about surprises that happen, good or bad ones. But I guess that's a perspective. So um, I think it's fascinating to see that we got through this earnings season, and I thought that you know things were positioned to be a little bit high, but uh, we just kept on trucking through. Like good earnings, bad earnings. Okay, these guys are losers. We're just gonna jump back all up into the winners. So it's like a giant momentum trade. So
Yeah.
it it's it's just fascinating to me to see that. But then I think we just got a revision from I think it was the Louisiana's what was it called? It was some sort of it's their core inflation tracker they use to determine how I think sticky um, core inflation is going to be. And it's been revised 3 times. I think the first time was like 2.4 and 2.6, and now it's been 3%. Now it's 3%. So we're kind of seeing the revision crimes coming back.
I mean, we're always going to
For
see that after the fact, aren't we? Like they're always going to revise the numbers, and I feel like if you're a conspiracy theorist or people talking about election years or whatnot, but you're going to see them put some sort of positive outlook or positive spin on so things don't look dire, and then just quietly a couple of months later they'll revise it down, and you actually see the actual numbers. But to your point, Wiz, the positive catalysts that could send the market higher or have already sent the market higher are people feeling like the Fed will cut interest rates. And the opposite side of that is, as you're talking about, if core inflation remains sticky or reinflates, which we're seeing some signs of now, then that means that they won't be able to cut interest rates and they might have to hike again. So that's like that's one hand and the other hand there, a positive and a negative catalyst. The other catalyst is
it's
obviously, will the US economy remain strong? Will the world economy remain strong? But if we just focus on the US for a second, because it's so obviously influential to every other market, earnings so far have maybe given you a forward look to the economy, stock market not being the economy and all that, but it is an indicator that the economy will remain strong. However, I think that is indirectly linked to people thinking that AI will boost productivity. And you and I have spoken about this before. It's like all of the earnings growth in the stock market has been carried by the Magnificent Seven, or maybe the Magnificent Six, and it's Tesla. And it's all based on this AI hype. So will you actually need to see AI come through and actually boost productivity? to keep this going? I don't know. That's the question. So, and then
That's
again, on the other hand, if earnings falter and if AI does not come to bear in this way, shape, or form until much later, will we see things tank? That's how I see the positives and negatives for the whole market.
yeah, it's the dual risk with inflation, right? You're kind of we're at the the Fed has a challenge to make, and they're kind of trapping themselves because the economy isn't as strong as it was in 2021, right? And into 2022, it was strong enough to handle all these interest rate hikes. And they were even surprised that the markets were recovering with 5% interest rates. Like, oh, hey, I guess we did it. So they even believe to an extent that maybe they, inflation was transitory after all. So I think they're still on that note of, we've kind of done it. And with the new data we see, obviously we need more data in the following months to confirm a trend. But it's not as promising as it was in December when, the talk of cuts this year was inflamed during the FOMC.
Yeah,
So
I feel like
that,
I don't
yeah,
know, man. Like
sorry.
I hear what you're saying, but like what it comes down to for me again is like we're seeing
Well,
so
what
much.
I mean is we can't hold rates at 5% forever, right?
Well, for a while we
Um,
can, and they're going to have to increase. That's
well,
what I was going to say, because
yeah,
back then when they were like hiking as fast as they're seeing, we started seeing people get under stress, right? Like under some sort of financial duress, perhaps. But now we're seeing crypto moon. We're seeing all these risky assets just go risk off, and people are getting all this money. So, like, if you think about economic indicators for, let's just like focus on the US. It applies to everywhere, but the US, right? Inflation has remained flat. If it reinflates, that'll be a problem, but it's come down and it's staying flat. Like it's sticky though, and that's bad. Wages in general are up, so people have more money. Rates, they're high, and they, in my opinion, will have to either stay here or get hiked higher. Housing
well,
has been going. What are we going to say about rates?
well, they've spent their money a little bit by buying, the Bitcoin and all the altcoins and all that now. So we've seen liquidity being poured into these illiquid markets,
Yeah,
and
but they're getting the returns, mate. So if they get flush with cash again,
well, you
then
have to you have to sell first, Arnie, to get returns.
that's
Like
true. That's
that's
true. And no
yeah,
one, I don't know about at the micro level. I'm not sure, but let's just assume that people are getting all this crazy money again, which is going to alleviate the debt
yeah.
burden, alleviate the credit cards, which were pushing the limit for
Well,
people. So then
the
just let me run through this quickly, and then we'll get your final
oh
thoughts.
sure, yeah, yeah,
So
yeah.
housing, I don't know if you'd say housing is like bullish or bearish, but I feel like housing in America, I think new homes started was less than they thought, but then prices might be coming down. Jobs, like unemployment's at like near all-time lows, if not all-time lows. Debt, like people have taken on a lot of debt, which we just sort of referenced. I think the credit card numbers for America were like the highest utilization ever, and people were like, struggling to sort of service it. Manufacturing, um, is probably not doing great. Again, I haven't looked at this for a little while, but confidence in the market, I would say, like people, like general people's confidence, not just you and me talking about the stock market, but general confidence in the economy, I guess, like the economy, probably low, and the yield curve is sending all sorts of bad signals to us. So if I think about those economic indicators, um, I don't know, man. I feel like we're still in for a potential crash, but this euphoria might change things. What's your general outlook?
Well, I think that the only way that you're able to stop inflation is to suck up as much of that excess liquidity as you can. And that's really what the stock market is for, right? Is it pulls in all this extra money. And then when, you have an event, that kind of goes poof. So I feel that any excess money is going to chase risk. It's going to chase Bitcoin. It's going to chase these riskier assets that have extreme price fluctuations. So I think we're seeing the natural inflation process happen again. People are making more money than they did before. They're spending that money. They're putting it to work. And that's the return to normal for me, for the economy, right? So I think if you were to take that crash chart for a bubble, I think that for the economy, we're back in return to normal here, where people are feeling confident, or at least a little bit more confident than they were before.
Okay.
But yeah, so that's kind of where I see things going. Whether we go back down, whether we have a severe economic impact, it's going to really come down to how Congress decides to continue spending. Because if Congress is spending, like, I think almost $1 trillion in debt every 2 to 3 months is the new statistic, which is a lot of money to borrow and to spend. So that's obviously having an impact on incomes, on economic activity. So we have that too. If they start to curtail their spending, that will cause the opposite effect to happen. So we're kind of just in a holding pattern, letting this ride out. Like, where do we go? But
Yeah,
the
I
Fed
agree.
can't. I don't think they can cut rates meaningfully this year.
Mate, they have to
Um,
hike. I actually thought they could just hold steady and they'd be fine.
yeah,
But I think the rest of, I want to say this exuberance. I think you said very enthusiastic at the start of this podcast. I want to say this exuberance we're seeing in financial
yeah.
markets. I think they may have to go a little bit higher, and that's like, no one's going to want to hear that. It's just more pain, but it's not going the way they need it to go. So
Well, yeah. Liquidity finds a way, right? Uh,
Jeff Goldblum.
that that's how I feel like this is. You put up all these obstacles to restrict liquidity, but then money supply is going back up. So we're seeing like this strange talk from the Fed, like, oh, restrict your financial conditions are so tight. I'm like, oh, okay, sure. Then why is NVDA almost at $900 a share today? Like, why are we seeing these bubbles coming back? Carvana has returned from the dead.
That's a 10
You
times from
know,
last year, man. That got to like $8 a share. I think last time I looked, it was like pushing 90.
yeah. And I mean, it's pretty remarkable the turnarounds we've seen um, from this reinflation, from people just going out and YOLOing in and saying, I'm going to the moon. So it's dangerous. The Fed is, because they were not serious about we could hike more, which is why I was saying they need to show the market they're serious enough to still hike by doing like a 25 hike last month. Like, oh, okay, yeah, don't overdo it. I'm I'm in a hailstorm. Sorry.
No, you're right, mate. Well, I think you and I are going to have to wrap up anyway and sign off.
Yeah.
I do wonder what's going to happen next time the Fed meets, and I think that they should hike. I wonder what the odds are at the moment of whether or not they'll do a 0.25 basis points. But
I think I I don't know if there are good odds for a hike yet or any. I know that the cuts have dropped dramatically.
yeah,
Um,
okay. So
so I think another pause might be in order. What will cause them to hike, to me, is inflation expectations on anchoring again.
which
So,
we're
and
starting
that
to
was,
see, perhaps.
we're seeing some movement, but it's, I think, in the shorter term. So that's not as concerning for them. Um, I think what we need to see is commodities or goods inflation return a little bit. And that'll wake up expectations, because when things start to cost more, that really begins to move expectations higher. So if we
Yeah,
get some bump in oil, gas, God knows, wheat, I don't know,
pork
then
belly,
then maybe,
orange juice,
yeah.
the important ones.
Well, well, heck yeah, right. Beef.
Yeah,
Well, you
yeah,
could see some issues because of the Red Sea still.
yeah, yeah, yeah.
There was a 41,000 tons of, what was it, fertilizer was just sunk into the Red Sea.
That's horrible. That's
That's
a that's a that's
yeah,
a like aside from markets, that's just a horrible like eco catastrophe. Anyway,
yeah. That's going to destroy the sea for decades, probably.
that's fucked up, man. Anyway, we got to
Yeah,
sign off. All
I know.
right,
Yeah. So, yep.
Wiz, Arnie, we hate money. Episode 9. That was a good pod, mate. I'll catch you on the flip side, eh?
Oh yeah. See you later.
See you, mate.